I think the biggest question that investors have right now is that have markets bottomed out or is the worst yet to come? I think that is one question which most experts find very difficult to answer, but I will throw the ball in your court. Then in addition to that, I think markets and investors want to understand that there's so much talk on small caps and mid caps, and even the regulator last year had said there is froth in that segment. So how risky really are small caps and mid caps right now? Because the swings that we are seeing across the small cap and mid cap segment is absolutely wild. I mean, when they go up, they don't know the ceiling. When they go down, they don't seem to know the bottom. Then I think from a retail investor perspective, there's this question on what should I do with my SIPs? Should I continue with my SIPs? Should I become more aggressive? Should I hold back? Or is this really the time to pick up some good quality stocks which are available at low prices? And then, of course, we've seen all the volatility in the gold prices, and many investors are wondering, should we just forget about the stock market, go ahead, add more gold because gold is going nowhere? And finally, I think investors who are here or have been here and want to continue for the long run, they just want to know how long before I see markets climbing back to the September highs. So let's take these one by one, Amit. In your opinion, have markets bottomed out or not yet, and we can see far more levels of crash when it comes to the indices?
All right. I believe we are in a phase of low earnings growth as far as the companies are concerned. Technically there is a support at 21,750, 800 at the Nifty level. There could be some sort of support there. And depending on how the trade wars unfold over the next 3 months, we can see some more volatility. So technically there could be a bounce back, but I
Okay.
think fundamentally it would take another 3-4 months for markets to settle down and sort of form a bottom. Remember,
Okay.
forming a bottom is a process. It does not happen usually overnight.
Right.
In hindsight, we can say that X level was the bottom, or
Yeah.
Y level was the bottom, but the bottoming process after such a sharp fall,
Yeah.
that would take 3-4 months, because the technical structure of the market is now sort of broken.
All right. Amit, you
As far
mentioned,
as the
I'll just, if I can
yeah.
just interrupt for just a second, Amit, you had mentioned that that we don't expect corporate earnings to be great in the fourth quarter as well. But do you think with all the changes that we've seen in the income tax, rebates which the government has offered and more money in the hands of consumers, is next year likely to be a better consumer story for India? And I understand those numbers and GDP growth will be, will be announced with a great degree of lag. But do you think right now, from where we see the scenario playing out in the macroeconomic landscape, is next year likely to be better than this year?
So I think the first half will be still under pressure.
Okay.
The consumption boost which was there from the budget, it's very small if you compare it to the percentage of GDP. It's actually less than
Right.
0.5% of the GDP.
Right.
Moreover, that incentive is not coming in one go. It will come every month. So it's a trickle down effect.
Right.
I think a combination of liquidity boost by the RBI, there has been a rate cut, and I think there will be a couple of more rate cuts in the first half of next financial year.
Right.
All these will play out, but it would take 6 months for these factors to play out, because banks do not transmit the rate cut immediately. It would take probably a quarter or so to actually transmit the rate cuts. So
Okay.
the consumption impact will be slow to get into that, and
Right.
moreover, we are not seeing any very big uh, pick up in the private capex as well. So my
Got
sense
it.
is that first half will be slow,
Right. So
and
H2 is
it
where
would
you're
things would
betting
pick up
some
in the second
hopes
half.
on. So let's hope that H2 of the next financial year is better. I want to come to my second question now. Small caps, mid caps, your advice to retail investors: avoid them at all cost, play with them a little gently, or go aggressive on them?
So we have been very cautious on the small cap space for the past 5-6 months. In fact, we have raised a lot of cash, sold a lot of positions, or reduced our allocation in a lot of these names. But despite the recent market fluctuations, both the mid and the small cap indices continue to show elevated valuations as compared to historical averages. They have come
Okay.
down from the top, like Nifty small cap was 36x. It's currently, I think, around 26x
Right.
forward earnings for 1 year. But I think it would take time for the full correction to be, to happen.
Yeah,
Having said that, there is an opportunity, stock specific, in certain segments like
right,
pharma, chemicals, API, CDMO,
right,
which can do well over the next one year or so. So
right,
if anybody has more than 12 months of time horizon, I think there is a case of, increasing a little bit of your small cap exposure. You can still be a little conservative by having exposures in large caps.
right.
But I think anyone who has more than 12 months time horizon, in the next 3 to 6 months are actually good time to start picking up small caps again. That's what we are doing. We are
All
adding to
right,
the position slowly, but we are not in a hurry. It'll probably take 3 4 months to deploy the
got it,
cash
got
fully
it.
back into
Right. So
the
you're saying
portfolio.
12-month horizon, go for small caps, and in any case, look at sector specific and not the entire basket. Now, for those
Yeah.
who are using, fintech platforms and making their own SIPs and buying mutual funds directly, good strategy to continue SIPs or switch over to just picking up good quality stocks. And in that context, what should be the allocation of gold in their portfolios as well, Amit?
So I think gold is mainly driven by the central bank buying and a lot of uncertainty around the tariffs. I see the second part, the tariffs part, getting eased out over the next 3 months. So we sometime, post May, post Akshaya Triti, we can actually see a lot of profit booking happening in gold
Okay.
once these tariffs is out of the way.
All right.
As far as buying from the central bank, that may continue because everybody is trying to diversify a little bit
That's right.
in their reserves by buying gold. So that may happen. That is happening across the central banks. You know, Russia is doing, China is doing, Brazil is doing, India is doing.
Got
So I
it.
think that will continue.
Okay.
But I will not be a buyer in gold at these levels, even though there is a potential upside of
Upside.
5 7% from
Sure.
here.
Sure.
I'll probably start taking my chips off in the gold over the next couple of months,
All right. And what
and
about the
not really buying
SIP?
fresh.
What about the SIP? Continue with SIP versus pause SIPs, go for good quality stocks right now. Could be large cap. So, what is your view on what investors who are doing a DIY investment on fintech apps, what should they be looking at right now as a strategy?
So again, it's a very investor-specific question, depending on the financial goals and depending on the current financial circumstances. One should take a call. But
Okay.
as a general answer to that, the passive indices, one should keep SIPs going. But as far as the active SIPs are concerned, in the active mutual fund schemes, one should take a call. How they are performing. If somebody was very, overloaded on the small caps and the mid caps, or even the thematic, then they need to reevaluate how they are going. Because remember, there have been a lot of inflows in mutual funds in the sectoral themes in the past 1 year or so.
Yeah.
And a lot of these themes will not come back very strongly in the next 6 to 12 months at least. So
Got it.
thematics like capital market, thematics like defense, PSUs, they may not come back in a hurry. So I don't see a point of doing SIPs there. Probably
Right.
you have to stop there, utilize the investment advisor to take a call, and shift it to the themes which can do well over the next 12 months.
Got it. And a question which I'm sure you may not want to give a direct answer to. So my question is, how long before September highs can be reclaimed? But if you can't answer that, Amit, how much more are we likely to see this volatility? You said that second half of next year is going to look better than the first half, but where things stand right now, how long is the wait going to be before we can even dream about the September highs that we saw?
So, in October last year, we have already postulated that we don't expect a new high for the 12 months. So, the September high is unlikely to be breached, given the current scenario, of the economic growth, how the quarterly earnings will, pan up over the next 6 months. We don't anticipate a new high till at least September 26, 25, sorry.
Right,
And post that, again depends, how the economic situation is there in both in India and globally.
right.
So my sense is there will be a time correction for 12 months minimum, and post that one can expect a new high starting with the Nifty and then catching up of mid caps and small caps. So it's a very normal time and price correction of 12 months we are
Right.
anticipating. But obviously anticipating that we have raised cash in the portfolios and we are slowly deploying that. So there are stock specific opportunities, but nothing may happen on the Nifty level for the next few months.
Got it. Well, it's going to be a 12-month correction cycle. Amit Kumar Gupta, thank you so much for joining us this Friday morning and sharing your views.